Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. Well, there's been a lot of angst in the shares of Apple Computer. Of course, Apple's rocketed higher in the past few months to about $650 almost per share. Earnings come out April 24th. A lot of people worried that Apple will not do what it has done for the past, 20 so quarters and knock the top off of the ball. Of course, Tim Cook is the CEO, not Steve Jobs. It wasn't a problem last quarter. Tim was at the helm and Apple reported earnings and the stock rose. But let's take a look at what Apple is here. Look at this. Here's Christmas. Here's Thanksgiving. The stock is up 63% since Thanksgiving. That's quite a bit right there. Quite a run. Right now trading at 17.5 times what it's earned in the past 12 months. Not excessive. It's about what the market is. But earnings have been growing, or actually earnings are expected to grow 60% from last year to this year, which ends September 2012 for Apple. So what you see is a stock that doesn't look very overvalued, but fundamentals sometimes can tell you very little when investors will be looking at the future, not what the stock has done in the past. But the past has been very good for Apple. Look at this run right here. Here we have the past 3 years. Since Barack Obama, no kidding, and no coincidence, or maybe just a coincidence, on January 20th, 2009, Apple hit $78 per share. Since then, we're up 682% in Apple. That's change you can believe in right there. Check back right here. The stock, it was way above its 10-day average. It fell back to its 50-day, the purple line right here. It's done that many times in its run in the past 3 years. So think of it this way. It was an overinflated tire that needed to have some air let out of it so that it could keep rolling. Another tech company to keep your eye on is Amazon.com, founded by this guy right here, Jeff Bezos. He, of course, is doing many other things these days. Out in Texas, he has what he wants to be a launch facility for rockets into outer space and suborbital flight for humans. One of them right there. And, of course, the Amazon Kindle Fire, which is taking the low-end buyer of the Apple iPad away, perhaps, or at least killing Samsung's Galaxy sales. But look what's happening here with Amazon stock. After coming down from about $245 late last year, when the market rallied, by the way, Amazon hit bottom, about $1.75 per share. We're up to about 191 today. It did get over 200. You can see that the trend sort of did change here. It's trying to get above its 200-day moving average. Everyone knows that Amazon's margins are very lousy in selling the Kindle. It wants to get it out there in as many hands as possible, but in so doing, it's spending a lot of money up front. Well, maybe the market digested that last time around and will be more favorably inclined to respond to Amazon's earnings, which come out April the 26th. So keep an eye on Amazon. Oh boy, we're talking about solar power. Solar power has had an absolute meltdown. Dead alligators still twitch. What am I talking about? First Solar is kind of a carcass of an alligator. And after you shoot an alligator, I learned this from a guy named Dr. Gator in Houma, Louisiana. He said, that's just knives, because the gator was still squirming. Well, the gator in this case is the body of First Solar. In the past few days, you've had a wild ride. It was down to $20, rose to $23.75 on news that it was cutting 20% of its workforce. I guess the shorts covered, and the stock ended up down on Wednesday about 5% on heavy volume. And really, it's like an Elton John song here. It's like the sun going down on me for First Solar. Stock that was nearly $200 per share last March. We're talking about $21.64 right now. What's the problem right there? You want to talk about it. It's Chinese competition, which has driven down the cost 46% last year to this year for photovoltaic cells, what they make. And subsidies in Germany, Spain, and Italy, other countries that were giving out subsidies to people to buy solar panels, are gone now because Europe's going through recession and austerity. Is there value in First Solar? EPS are expected to grow 5.3%, kind of paltry. PE is about, it's 6 times 2012 EPS. If you believe the company's going to hang in there, if these production cuts will jack up the price of silicon, maybe you've got a chance in First Solar, but the stock looks like a dead dog right now. The problem, it's not alone. Other solar manufacturers, this is the TAN, get it? Solar ETF, down in the reverse Big Dipper fashion, looking like First Solar itself. What's the problem here? Natural gas, another alternative energy source, is very, very cheap. The UNG, this ETF tracks natural gas prices. This is since last September, down from 40 to 14. Quite a decrease in natural gas prices, and the trend has been lower for the past 4 years. Chesapeake Energy would be your way to play that if you believe in it. Gentleman right here, the billionaire Aubrey McClendon, There's some allegations out that he took some improper loans from the company. And of course, Chesapeake, if it didn't have enough problems with the price of the commodity that it sells, now has additional issues to face. And the stock was down about 5.5% on Thursday. So look out for the earnings to come. Keep an eye on Amazon and Apple on the 24th of April.